Sean, when you're working with these farm families and if they want to start gifting assets to try to get their estate below that federal estate tax exemption, what's the process of making those gifts, keeping track and reporting that back to the government to show them that you utilize your exemption amount?
The government, like everything else, has a form that we file so that they can keep track of us. It's called a 709, and it's a gift tax return. That gift tax return shows how much of the $12,920,000 gets used up per year. Of course, we have the $17,000 gift annually that gets to go under the radar with the government. But let's say in 2023, your farmer gives $12 million of land into their irrevocable trust. That $12 million value now goes off of the $12.9 million. So in the future, they have another $920,000 that they can gift or have available to gift in the future. So the government keeps track of it through that. The key element, though, when you're starting to do large gifts is getting outside valuations, whether it's an appraisal or comparable sales. But at that level, you want to make sure you cross your T's, dot your I's, and keep the government out of your paperwork.
And that comes in the form of more of a certified appraisal, doesn't
Correct.
it? They have to, it's not what the tax assessed value of the ground is. They have to have a certified appraisal attached with that 709.
Yes, the 709 requires you to attach the appraisal.
Sean, when we're talking about this estate tax exemption, that $12.9 million, that's per person, correct?
Absolutely. And a married couple get to share that.
Okay.
So, let's round it up to the 26 million so it's easier for me to do the math without my calculator. But essentially, in my example, where the husband gifted 12 million into his irrevocable trust or direct to his heir, then that takes away from the 26 million combined. At death, that leaves the couple $12 million or $14 million to use, whether it's the husband or the spouse. It's called portability. The IRS has allowed those couples to share the exemption amount.
No. And in that process, after January 1st, 2026, if they haven't used their full exemption, they lose it.
It's gone.
There's no way to get that back.
Absolutely, because you've already hit the $5 million that they're allowing us to have in January of 26.
So I always use the example, if you gave away $5 million worth of assets and you have $13 million today to round it off, and January 1st, 2026, it reverts back to $5 million, you've lost that $8 million. You don't get to keep it.
Absolutely. Plus, now the entire estate that you have left in your name is taxed.
Yeah. So the time frame that a lot of our clients and a lot of our farm families are facing is a pretty short window right now, depending on what's coming out of Washington.